Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 11th of September. All right, as we come through the end of the North American session for Monday, just take a look at the currency pairs. Now, there's been no real change in sentiment on the Aussie and Kiwi, still with a downtrend, which is pretty solidly in place. Kiwi probably more so. A little bit of sideways trading as you usually get on Mondays without any major events. Dollar yen continues just to bang away sideways, waiting for some more geopolitical events to influence it, but not much is coming on that front just at the moment. But the real big shaker here, obviously, if you look at sterling, it's up 100 points. We did have some weak manufacturing production numbers out of the UK, but once again, Brexit comes in with a sledgehammer, and we're talking once again the EU Brexit negotiator, Brainy, I think his name is, has come out saying that the UK may have a deal in the coming weeks. Now, if you look into the components of that, it's pretty much along the same lines as what he said about a week ago. And we saw the same sort of much bigger move. Instead of the coming weeks, it's actually coming months. They're talking 6 to 8 weeks at least before a deal. So anyway, euphoria has kicked sterling to the top side. And that has ramifications for the long-term charts as well, and does take sterling into a bullish sort of outlook at this stage. The euro sort of went with sterling, but once again, it's just whipped back into the middle of the range. It's now trading sideways, and dollar CAD sideways after basically NAFTA's. They're still trying to work out NAFTA. There's a massive hurricane coming towards the US coast of Florida, and that doesn't seem to be doing too much to oil, which is surprising. So that's where we are with the majors, okay, starting the day. So let me just come across here and just give you a look at the two big culprits out there. We're talking about the US dollar and the dollar yuan. Okay, now these two currency pairs were correlating extremely high, over the last coming weeks, if not months. US dollar just drifts back into the range. Now, there's no real change in the US dollar sentiment, right? Now, this is the US dollar index, okay? It's a basket of currencies. 57.8% is euro. Sterling's around 13%. So if those two currency pairs rally, the dollar index comes off. So don't think this is US dollar weakness. This is just sterling strength that is driving the US dollar back into the range. So don't think the market has forgotten about those strong payroll numbers. It hasn't. What we're looking for is just the next major event to really kick it into gear. The dollar yuan, okay, the market is starting to price in more weakness here. Now, the Chinese officials have come out sort of threatening once again yesterday, saying if the US increases any more tariffs, they'll take action, which is, neither here nor there. I think Trump will run at that idea. They also said that they would protect China against any black swan events, which is basically, a catastrophic economic event where, say, the tariffs really impact China. Well, then they would do what they need to. And that, to me, tells me they would just devalue their currency as far as they need to make sure they sell their gear and no one else sells anything else. So I think they're really drawing some hard lines here. And this is where Trump has got them exactly where he wants them. He's backed them into a corner. And if they want to devalue their currency, it's going to impact the rest of the world who actually sells the same stuff. So I would expect a global push against China if this actually does happen. Equity markets, with all the geopolitical noise going on, as you can see, there's no real, it's like handbags at 10 paces. No one really believes anything is happening at this point. And you can usually see that reflected in the equity markets, which are at this point a little bit neutral. The funny thing is, what we are seeing is starting to see a continued decline in the Chinese equity markets. Okay, the the Shenzhen composite, and also the Shanghai index there. So basically, you just want to keep an eye on those. As those Chinese equity markets get hit, you'd expect dollar yuan to rally. Okay, that's pushing a weaker yuan, and you should see further pressure on the Aussie and Kiwi as we go forward. All right, now that brings us into what we've got to look forward to today. Now, it's a massive week, as I was saying yesterday, on the economic data front. So But the start of the week is actually really spread out somewhat. And yesterday we had some Chinese CPI numbers, didn't really fit into the equation. First thing to note, geopolitical events. Yes, of course, we do have some major geopolitical events impacting the market. And if I just highlight that for a second, this is the major news that Reuters has at the moment. Okay, hopes for breakfast deal lift. Okay, well, that's what I was talking about there. This is really positive, and it's actually going to be really good for trading as well, because once we get Brexit sorted out, sterling goes back into a normal currency pair. At the moment, it's just been pulled for the last year on geopolitical events. We get Brexit sorted out, then it just comes down to economics, and that's going to be a great result for us. I'm pretty chuffed about that. Dollar CAD, okay, it's just trading sideways. So the chance of a NAFTA deal at this point doesn't look like it's really that close, and that's keeping dollar CAD on hold. And then the rest of them, you got the emerging markets: Turkey, Venezuela, Argentina, Indonesia. I mean, everything's getting hit. I mean, there's nothing really. Those economies aren't really going to impact anything very much. Then we also have, just keep an eye on this storm, right? This hurricane as it comes towards the coast. It's the biggest storm of the season, but it isn't having any impact on oil, so that doesn't really matter too much at this point. You have to sort of wait and see what sort of carnage it has on the market. All right, so that's where we are with the news, and that's where those geopolitical events are really chiming in. So make sure you understand that the markets are getting pushed around a bit more from geopolitical events than economic events, okay, and central banks. Upcoming events, what do we look for today? Well, we've got our major currency pairs. They've got some. They've had some movement overnight. Obviously, sterling, the main shaker. And if you look here, I've got the average weekly earnings here highlighted, but it's really it's the claimant count change, the unemployment rate. All right, there's three variables here. The Bank of England. Why I have the average weekly earnings? The Bank of England has highlighted they are watching the average weekly earnings as much as anything else. Right, this is their key focus. Very similar to the Federal Reserve in the US. Okay, and then outside of that, we don't really have anything until the following day where we have US PPI. Don't forget, Thursday onwards is pretty epic. Okay, we've got data across all time zones. Bank of England, ECB, US CPI. I mean, it's going to go off. It's going to be a great, exciting trading day Thursday, but just focus on what's in front of you right now, and all we can do is it's just sterling. Okay, so when you're looking at sterling, you're thinking, right, this is going to be interesting from here because of those moves last night. Now, this brings me down to the daily analysis snapshot. All right, now, Aussie and Kiwi still bearish. Okay, these are the two pairs that, to me, have clear direction. Kiwi more so. The rest of the currencies, euros is back into the range. US dollars is back in the range, dollar yen back in the range, dollar CAD's now stalled and back in the range, and same for the Swissy. So what we have got here is we've got the odd duck out, and that's very strange that these pairs that usually correlate are out of whack. But this is, a geopolitical event has been holding sterling down. Now, if we get clarity on this and we see what's going on, I've got sterling into a bullish situation at the moment. And if I just come up here and give you a look at why I see that. So for those members who do have access to the summary, make sure you click on the flags there. You can actually get access to this. So when I'm looking at the overall assessment for sterling, okay, we've got three components here: the central bank, economic data, and technical outlook. And I've got the sentiment as bullish. Now, the Bank of England, they, to me, are still hawkish. Inflation is at 2.5%. They have to raise interest rates if inflation is above 2%, unless there's something really weird happening. Now, of course, Brexit is something weird, but now that's turned from a bearish situation to a bullish. They have to control inflation, right? And with a bullish scenario now for sterling, this is going to, the central bank probably has to raise interest rates this week. And that's what I'm expecting myself. Now, if you come down a little bit further, the key economic fundamentals, well, if you look at this, so I've got the central bank sentiment as up, and the technical outlook is now swung to up. The dailies has now broken higher. The hourlies are, of course, higher, and the weekly charts are sideways. So the technical outlook for me is for sterling is higher. If we got the fundamentals here for sterling to kick in, well, then this thing is going to skyrocket to the top side, especially with, as I said, with that positive Brexit news. And these two key numbers here that the central bank looks at are out today. That's why today's data is very important. Average weekly earnings, unemployment. If this data comes out strong, well, then you can expect, I'm expecting sterling to scream to the top side. And that's where I've got a bullish signal for sterling at the moment. So if that turns top side, well, then that's going to really rocket to the top side. And that's where I think the big potential is. And of course, that's where the main data is. So when you're looking at the data and you're connecting the dots, make sure you have an idea of the overall sentiment of the currency pair. Of course, we've got the data that you can look at, and then you've got the technical picture as well. And this brings your trading all into one sort of microcosm where you've got the fundamentals and technicals all working together. And this is where you really zoom in on your charts and start to work out what's going on here. Now you have a look here at this technical level on sterling. Now all we have been doing is just moving it to the next high. So to me, this is already broken high, and you may have actually left your line over here, but you can see how the false moves around the geopolitical events can really screw things up. We have a bit of a false break here. If I just blow that up, you see the price action here. So don't fall in love with your positions just yet. And just because they're talking positive about Brexit doesn't mean we won't see something else. So the price action here previously has been a little bit daunting. It looks set for higher levels. We need a catalyst to drive it higher, and that's where those unemployment figures come into play. I think it's a really good opportunity potentially for sterling. I am very wary though that it is a geopolitical event. So once you are looking at that again, it does, just remind you that you don't put all your eggs into one basket and fall in love with the positions. But if anything, this thing has broken higher above these previous highs. I know it's even only slightly, but that's enough to really get it going. It's broken through the top side there. And if I just get up the bigger charts and have a look at this, have a look at sterling here on a multiple time frame setup. Okay, on the hourlies, you can see it's breaking higher. This is what I'm sort of more liking. The daily charts now breaking back higher, and the longer term weekly charts now sort of starting to trade sideways, which suggests that you can almost see there's a bit of a bottom forming there. But to me, it's more sideways than up. But we do have the hourlies and weeklies working together. All right, that's pretty much it for me. If I just, I guess the last thing is just to show you, I mean, you just want to go with the swings and roundabouts of the market. And just having a look here. So we've got the dollar index. You can see here the US yield curve. Now, the media were talking about this a week or so ago, saying how this was going to flatten out and the US was going to go into recession. I don't think, if I just change screens. Now, this is where all the high bids. Now, this is actually steepened of late. It was down here around 3026 before. So that's taking the US out of a potential recession. Well, don't forget, the media, once again, will try and sell tickets to anything and make up various scenarios. When you're looking at dollar one, I mean, this puppy is going to be a bigger trading opportunity every week from here. So looking at the main correlations, Aussie still only at 67%, Kiwi at 55%. Obviously, Aussie yen is at 67 as well. But look at the Dow Jones, almost 77%. So if we see a movement in the yuan, it's going to be the opposite move almost in the Dow Jones. So we want to keep a very close eye on that, especially as things hot up. Hopefully Trump can come through with some more tariffs and we really start to get the battle on. I think everyone's waiting for those US numbers to impact China, and that's when things will really get interesting. Just on the just to finish up, looking at the overall events here, when you're looking across the board, now I've got a couple of events there. I've highlighted the unemployment figures as the key release today for the UK. But if you have a look here, I'll just refresh the chart and get up all the low impacting and the other data. You'll see that there's a number of various events here that could potentially impact. Now, just because they're low impacting doesn't mean they can't impact. the NAB business conditions for the Aussie, I have seen that occasionally or rarely impact. It can come through if it's massive variance. Don't forget, this is just an advertising tool for the NAB bank. These money supply numbers, there's no time frame for those, so you can't really plan for that event. Then you come back down here into the chunky monkey, claim account change, the unemployment rate, and the average weekly earnings. So don't forget, there's 3 variables here for sterling on this release. It's not for the faint-hearted. And then half an hour later, we do have the Zoo economic sentiment numbers, and that pretty much rounds us off. If you just scroll down a bit further, we've got some housing starts numbers out of Canada, but other than that, there's nothing really coming out. So you just want to focus on the current trends, and that brings us back to the pairs that actually do have sort of current trends at the moment. Then you're looking at the Aussie, Kiwi, and to me, a bullish sterling. All right, pretty exciting. It's good to see some positive news out of Brexit. Hopefully it follows through and we do get some major movement. I'd be very chuffed to see a continuation of less geopolitical events. All right, guys, that's it from me. We'll see how things pan out. You catch me in the live trade zone. All the very best and good luck today. Cheerio.